It's time now for an in-depth look at the markets this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on today.
Hello.
So U.S. stocks closed again at all-time highs on Monday, though it wasn't as big of a jump this time. It seems there's some caution ahead of earnings season, and now here in Korea, the KOSPI at least bouncing back a bit. What's the story today?
Sure. If we look at the U.S. interest rate environment, most of people are expecting somewhere between 25 basis point cuts to 75 basis point cuts till the end of this year. And that was increasing the liquidity in the market, and that has resulted into quite strong equity rally. But in terms of the economic numbers and also the earnings numbers, we are seeing slowdown in U.S. for the second quarter. And the FactSet sheet is saying that, FactSet data is saying that second quarter earnings are expected to be down by 2.6% year on year. So question mark is that it is down, but how much is going to be down, and whether or not this indicates the possibility of U.S. recession in any time soon. So with that, I think that people are being cautious in terms of investing into equities for the time being until the actual rate cut happens on the July 31st. But the study shows that if the Fed rate were cut for the first time after a while, and if that does not link into an economic recession per se, then most of the U.S. market has risen since 1971. And by over the period of 12 months, U.S. market on average rising by 16.5%. So we do still think that there's a momentum for equity market to move up further, and that will have positive implications in the future. But for the short term, we have not seen the rate cut yet for the first time. So I think the market will probably wait until the July 31st. Now, as for the Korean market, with various news, it was slightly up by 0.45% for KOSPI. KOSDAK was pretty much flat. Japan, with the news of slowing down in terms of the exports, and the earnings are expected to be weaker, was down by 0.69%. Chinese market, after yesterday's rally, it was pretty much flat.
Got it. Well, there's a report from Reuters citing a former U.S. government official as saying that the Trump administration might let American companies start supplying Huawei again within a couple of weeks. That's created some anticipation for a rebound in stocks related to chips and 5G. How is the market responding?
Yes, with the 5G aspect, it is quite important for the fourth industrial revolutions for global economy. The fourth industrial revolutions would include, foundry business as well as the 5G areas. The reason for that is because of the data center needed and the cloud business needed in order to improve this business side. And that clearly creates a huge amount of demand for DRAM and non-memory demand, etc. So China, as for the Huawei, it is one of the most competitive and probably effective 5G equipment producers in a global scale. So with this news of the Huawei actually be able to get some parts from U.S., that will be definitely positive news for the overall global economy. We'd like to see more association between U.S. and China in regards to this. Clearly, improvement of trade side is definitely positive news. I think that current trade dispute can be a long-term process in terms of trying to win the first position in terms of the fourth industrial revolutions. But I think that the negotiation has to happen continuously, because you cannot really just invest in all type of fourth industrial revolution related products. So I think that this will be definitely positive news going forward.
Well, now here in Korea, there's a lot of money moving into dollars and gold. The Bank of Korea says dollar balances in June were at their highest since last November. Why is that, and how long will this go on?
Well, I mean, with the Korean economic growth rate being very weak, you've seen first quarter down quarter on quarter, and year on year is lowest of 1.7%. Clearly, lower interest rate environment is causing investors to put money into dollars, given the U.S. interest rate is higher than Korea. And also, as the BOK is likely to follow the suit of what U.S. is doing in terms of rate cut, then there's additional liquidity will be injected into the system, which causes the commodity price to rise accordingly. And clearly, there are concerns about currency war amongst the countries, which affects the gold price, because the gold is an alternative asset to the cash. So overall, dollar deposit as well as the gold investment are rising. Clearly, that is moving away from the traditional bond investment and trying to enter the so-called a lower risk area.
All right, Mr. Yu, that's where we'll have to leave it for now. Thanks so much for making time today.
Thank you very much.